Ground controls and major tom.
And fling and in.
Take your
and
protein
fling.
and put your helmet on. Hi, going to have a chat about echo bass. And a warm welcome to one and all. And for those of you who haven't seen me before, my name is Langers, and I am the overgrown child with the terrible music taste that is the Scruffy Trader. And what I'm trying to do is kind of inspire you with your own trading, maybe show you a trick or two along the way. So if that sounds good, please click the little subscribe button. Genuinely helps. We'll crack on. But before we do crack on, I kind of want to raise my coffee cup to all the subscribers and give a very heartfelt thank you. We've cracked 2,500 subscribers this week. I genuinely never thought it would be possible. And the whole channel is driven by you guys. So here's to the coffee and a very big thank you. So what's Echo Beach? Well, Echo Beach was actually a song by Martha and the Muffins. Echo Bass. You can tell what I've been listening to this morning, can't you? Yes, I am a child of the 80s and I love all of that sort of stuff. Anyway, Echo Bass, for the sci-fi fans, and as you can kind of see by my t-shirt, I love Star Wars. In fact, I have Star Wars everywhere. But what's that got to do with trading? It actually has a lot. Because whatever job, profession you're in, you're going to need a base. And this is instilled into you even as a kid, because you make your base camp and all of that sort of thing. Now with trading, the base is twofold. You have your base of operations, where you sit and you work, and that needs to be methodical and well thought out, because it is your place of work. This is mine.
No way.
And welcome to my Echo Base. As you can see, it has a homage to Star Wars all over it. From mugs, toys, original VHS that was turned into a light, etc. Even the action figures and what have you that are sent to me are kept here. I don't know if you can see them, but up on the wall there. And why? Because a base of operations should be homely, make you want to work. And I love it in my study. But the main area is the screens and this. And what's that? I always have Sky News running so I can see what's going on. I have a monitoring screen. I have a trading screen. And then I have a chat screen where the Discord and the Telegram for the Scruffy Squad are. And I can keep in contact with them while I'm working. It's a good, clean workspace. And the one thing that you always need in a good, clean workspace is a coffee. Because we all know Scruffy likes a coffee. And he does. Let's jump back on the whiteboard. But then you also need a base for your trades. And that's where Echo Base comes in. And yes, it's a homage to Empire Strikes Back. That's the base on Hoth. But Echo Base theory is echoes of the past to help you guide your trades of the future. And that's why it's called Echo. Because trading is all about self-fulfilling prophecy.
Prophecy caused all this trouble.
And once you figure that out, the rest of it isn't that difficult. So what is it? What is Echo Base? Well, the first thing you need is a bias. You must have a bias of direction. And this doesn't matter whether you're swing trading or day trading. So how do you get a bias? It's very simple. Use a moving average. So look at a moving average. Doesn't matter what it is. You can use a 20, you can use an 89, 100, 250, whatever you choose. But once you figured this out, stick with it. Otherwise you'll fall into system hopping. So for this example, it's a 20 moving average. All right. So if your price is above, you are long, and if price is below, you are short. That's as simple as it gets, guys. It really is. But is it enough? Of course it's not. The next part you need is an arena. So what's an arena in trading? What on earth are you talking about, big fella? Well, arena is exactly what it says it is. It's an area on the chart that you're going to work, and that is support and resistance. So now you've picked your direction, you need an arena, and obviously you're going to have your candlesticks within it. So if you know you're trading between that level and that level, you're already halfway there. Couple that with a moving average, a 20, that's give you a direction and an exit point. Because if you were entering on this candle for whatever reason, that top support and resistance is your target. Simple. Where do you put your stop? On the other side of that. So it's defined a target, it's defined a stop loss, moving averages defined your direction. Simple stuff. But is that enough? Well, of course it's not. You need more than that. Next thing you need is a setup. You need your setup. And what's the setup? Well, the setup is just your chosen, put my teeth back in, your chosen strategy. Now, it could be a moving average cross. I showed you how to use a MACD on the other video, how you can use higher time frames to work out the direction, how to get into an arena, support and resistance, and then how to enter using a MACD, the setup. So that sort of whatever, moving average cross, MACD cross, whatever it happens to be. I am no artist, by the way. Saturday night I am.
You ding dong!
But it's the wrong kind of artist. Sorry. And what's all this got to do with a slice of bread? Absolutely bugger all, right? Because you need to do your homework. And your homework is an echo. Echo. And what's that? That's your back testing. You need to back test through the charts, looking at your setup, looking at how it's performed within a certain arena, word support and resistance, and whether or not it makes a profit or not. So your echo is quite important. And the crux of the whole video is really to get you to think not just X marks the spot, but how X marks the spot.
Isn't that logical?
And the only way you're going to do that is backtesting. Look through the charts, plot the exact same setup over and over again. Certainly about a year's worth of data, maybe it's 2 years worth of data. And why 2 years? In trading terms, it's quite relevant. It's recent data, and it'll give you a reasonable, accurate forecast for what's happening now. Because markets change. You know, they do have cycles. And if you go way back, the information's outdated and it'll just throw out any of your figures and you'll probably be on the wrong track. So you want to go about 1 to 2 years back. And if it's working, brilliant. And then when it stops working, you need to figure out why it stopped working. Are you trying sort of bull trending patterns in a bear market? That sort of thing. In other words, is the market going up and you're trying to go down? Simple stuff. Anyway, it was just a quick snapshot as to the strange way I look at things. and hopefully it'll resonate with you. But as always, do what you love and the money will follow. See you all in the next one.